Hey everybody, what is going on? It's Bill at Franklin Loan Center, and so the big news of the day today, I guess, was that the U.S. appears to have inked a trade deal with Japan. That seems like a good thing. It sounds like they settled on 15%, blah blah blah, whatever. I mean, that seems like I tried to look up what are historical amounts, and it's really never been just a flat number for across the board, which it maybe isn't totally that even now, but. Anyway, it does seem significantly higher than it was historically, but it's really hard to get your hands on that information. So I guess the real question here is what does the market think about that? Is it having any interest rate impact as far as mortgages go? And right now the answer is no, essentially. I mean, I kind of thought, so this is pretty big news. I mean, this is a huge trading partner with the U.S. You would think this would bring some level of certainty. I was hoping for some kind of reaction. But I mean, the market essentially, it's, if anything, it's a little worse today. But it's actually a pretty small muted move, so not that big of a deal. So, I mean, to me, it's interesting because I think what the market has to digest, and when I'm talking the market, I mean specifically the bond market, the more sane of the bond, but the markets between equities and bonds is certainly the bond market. And there's, I guess, really three things that the bond market has to try and digest related to all these tariffs, right? I feel like one is it inflationary? The thing that I keep hearing over and over again is it is initially inflationary, but it's like a one-time hit because it's like, hey, here's the new prices. Now that doesn't mean that it stays as long as the tariffs stay. So it drives the price up and keeps it there, and then whatever normal inflation happens in addition to that. So, but the first part is inflation. Are there any impacts on this related to just the overall economy? Is it going to shrink the economy? Is it going to help grow the economy? That is, again, something the market has to digest. And to me, the last one here is what does the market think about the tariff revenue? And because I think the tariff revenue, on one hand, the tariff revenue seems like it could be a big deal because if it means that the government's bringing in more money and they're not having to, it shrinks the deficit, then potentially that could be good. Look, that to me it's essentially a tax on the U.S. Consumer, and it's likely to, I think, slow the economy. And forget about what I think. I'm looking at people that are much smarter than me, and they seem to have a similar take. So anyway, long story short is who cares what I think? It's really what the bond market thinks, and for now, the bond market has essentially shrugged it off to maybe a hair worse. So that's it. I just wanted to throw that out there. Anybody that's like sitting on the edge of their seat, waiting to see what's going to happen as far as any tariff deals and how that might impact interest rates or the housing market right now, in the light of a really significant trade deal coming together, not a big deal. So looks like we might have to look at some other things before we get to something that's really going to help interest rates. So just wanted to throw that out there today. We'll see what happens in the coming days. It's not like day one is the only thing. So we'll see if things start to take shape in a different direction. But for now, the market's shrugging it off. So that's all I had today. I'm Bill. I'm with Franklin Loan Center, and I'll see you all next week.